My name is Joshua Morrison, an investment analyst here at True Potential. Earlier this week, it was announced that the UK inflation rate fell from 2.1 to 1.8% from December to January, according to the Office for National Statistics. This contraction was driven primarily by lower fuel and energy costs. This figure represents a two-year low and is likely to be welcomed by consumers and retailers alike. Meanwhile, global markets reacted positively this past week to continuing optimism in regards to the US-Sino trade war. President Donald Trump has reportedly said he is willing to open the door to extending trade talks with China past the current March 1st deadline to avoid an escalation in tariffs. Mr. Trump's willingness to consider a later deadline comes as senior officials in his administration, including Robert Lighthizer, the US Trade Representative, and Steven Mnuchin, the Treasury Secretary, were scheduled to hold a new round of talks with their Chinese counterparts in Beijing this week. Despite there being no cemented pact, Chinese dollar-denominated exports rebounded in January, returning to positive growth of 9.1% year-on-year, recovering from a negative 4.4% in December. If we look back to November, average wage growth rose to 3.3%. If this figure was to hold steady, then real wage growth, this being the difference between wages and inflation, would rise to 1.5%. This would be the largest divergence since 2016 and could provide a significant boost to household spending. In other words, you may find that you're better off. Sentiment over the talks unsurprisingly drove Chinese stocks higher this week, with the Hang Seng rising 9.53% year to date. Optimism further spread to Europe, a key exporter to China, with the Euro Stoxx index touching a 3-month high on Thursday. If the difference between wages and inflation holds steady, this will give a boost to household spending. This, in turn, should provide some uplift to future GDP growth through higher consumption, the timing of which could be very fortuitous given the weakness of recent GDP forecasts and generally poor consumer confidence. Whilst the meeting between Trump and Xi Jinping is still not scheduled and the results of the current talks aren't disclosed, it does appear that Trump's willingness to extend the deadline demonstrates his desire to reach a deal rather than face ongoing trade wars.